So let's actually move on to an important piece of news, and this is the pre-budget season building up. And ahead of the big event, representatives from the BFSI space met the finance minister today. In fact, what we're talking about is FIDC, the Finance Industry Development Council, a framework body of NBFC. So they had their own deliberations with the finance minister. Let's bring in Ritu to understand exactly what they are seeking. And then I think we'll have the FIDC representative with us as well. Ritu?
Well, that's right, Surbhi. FIDC, which is the SRO for the NBFC body, along with a handful of NBFCs, held a pre-budget meeting with finance ministry officials today, really reiterating what has been a long-standing demand for the industry, which is largely around a dedicated refinance window. FIDC, in fact, has highlighted several issues, that they told us about after this meeting with the finance ministry, including, the need for diversified funding sources, improved recovery mechanisms, some of the persistent tax challenges that keep coming up. So specifically, there were four major asks. One is, of course, apart from this refinance window, the second is, reducing the threshold limit from 20 lakh to 1 lakh rupees for NBFCs to enforce security under SARFAESI, which is what is already available to banks. The third one is exemption from TDS on interest income under Section 194A, as is available to other financial institutions. And lastly, to notify NBFCs for deduction in taxable income under Section 80E on interest in education loans. Now, what exactly is the significance of some of these measures and how will they move the needle when it comes to the NBFC sector? To understand why these measures are critical, joining us now is Raman Aggarwal, the CEO of FIDC. Mr. Raman Aggarwal, thanks very much for being here with us. To begin with, just briefly summarize for our viewers, what have been the key asks, ahead of the budget, and what has the response from the ministry been like?
Thank you, Ritu, for having me. Yes, as I think you very aptly summarized it, yes, it's been a long-standing demand. See, what we need to understand is that the NBFC sector has been growing. If you remember in the NBFC symposium, which was held in 9 July, Honorable Finance Minister herself had quoted that NBFCs today stand at 25% of the bank credit, and she set a target of 50% of bank credit by 2047. And NBFCs, loans to MSMEs, funding to green assets like electric vehicles, solar rooftops is well known. We are, in fact, leading players in these segments. So all in all, there is a strong case for making funding available to NBFCs. Today, the sources of funding are very restricted. It's majorly depending on banks, and the larger NBFCs do raise funds from the capital markets or the overseas borrowings. The large segment of mid and small size NBFCs are either dependent on banks or they borrow from larger NBFCs, which increases their cost of borrowing and which further manifests in their increased cost of lending. So I think what we are requesting here is that to diversify this, if there could be a dedicated refinance window, and we have a classic case of National Housing Bank, which refinances HFCs, and incidentally, HFCs is also a class of NBFCs, but we do not have this benefit for other NBFC segment. And in fact, this recommendation was made by the Parliamentary Standing Committee way back in 2003, that there should be a dedicated refinance institution. So that's the key ask, number one. Number two, on the SARFAESI part, when you said, while you aptly put it today, we do not have any direct recovery tool. So if to enforce security under SARFAESI, we are required to have a minimum loan threshold of 20 lakhs. Everybody knows that the loans which NBFCs provide to retail loans are generally less than 20 lakhs ticket size. So we are not able to use SARFAESI. As a result, we are falling back on indirect recovery methods like filing check bouncing cases which are clogging the courts. So there is a very strong case to reduce this 25 lakhs limit to 1 lakh. So that's the second ask. The third, on the tax part, again, a very, very long-standing demand. Today, interest income for NBFCs is not exempted from TDS. So any non-individual borrower who borrows is deducting TDS on every EMI. Now, it's causing a huge operational nightmare. We presented a small data point that we collected data from 10 upper layer NBFCs. And as per this data, as on March 31, 2025, 3.3 lakh borrowers were there who were deducting TDS just from 10 NBFCs. Now, it is creating a compliance burden for the small-time borrowers. MSMEs, they have to deduct TDS, they have to timely deposit TDS, ensure proper quoting, etc. So this is, and no additional revenue to the government.
Got it.
Finally, as you rightly said, is
Got it.
is the issue of notifying NBFCs for deduction under Section 80E. Interest on education loans taken by borrowers are deductible income for banks, but for NBFCs, they need to be notified separately, and only one NBFC has been notified.
Okay, Mr. Aggarwal, we got those. Yeah, we got those, Mr. Aggarwal. The question, especially on this refinancing window, really was, what was the response? I mean, like you said, since 2003, since that long it's been brought up. Was there any favorable response to this request?
See, let me put it very candidly. In such meetings, there's a patient hearing given. There is no response. Obviously, we will get to know whenever there is a budget exercise, budget comes. So all I can say is there was a patient hearing given by the finance minister and the team. So we hope for the best.
Yeah, got it. Just quickly before we have to let you go, Mr. Aggarwal, we've been reading reports that a credit guarantee scheme of 20,000 crore could be in the works for NBFC MFIs to ease their liquidity crunch. Are you aware of this and the timeline, if you could confirm for us?
No, let me also clarify, we at FIC do not represent NBFC MFIs because we already have Sadhan and MFIN as the two separate SROs for them. So I think it would not be correct on my part to comment on that.
Noted. Since you were part of the meeting today. Sure, since you were part of the meeting, and we were wondering if this came up as well. But thanks very much. Yeah. Thank you, Mr. Aggarwal, for covering some of those important points for us. Thank you.
Okay. All right. Thank you very much for that, Ritu. Interesting subject. And we will see how many of these demands get a favourable hearing finally when we see the budget next year. Thank you for that.
Just one word